Good morning and welcome to the trade setup right here on BloombergQuint Live. I'm Niraj Shah. And the world is a different place, but India might be different today. Let me try and explain. By the way, wait till the end today. I think what stood out today for me is really interesting. But first, the world markets and the US markets came off in yesterday's session. So we had the pullback of sorts across Dow, S&P, and NASDAQ. And well, you could argue that shouldn't surprise such a big week for the US markets that before the cues come out, it would be on tenterhooks, especially today. So these markets came off, and I'll tell you why as well. But they came off in yesterday's session. Now, uh, is it rubbing off on Asia? Is the key question. I think it's mixed feelings. So I took stock of a lot of Asian markets, and there is some bit of green as well on the screen for some of the Asian indices, but a large tinge of red as well. But SGX Nifty is different too. So look at this. For example, right, HSI is up in the green. Kospi is slightly higher than where it started off, but lower from the high point of the day. So it's a bit of a mixed feeling for the Asian screen, if you will. The SGX Nifty indicates a start, which is marginally in the green. Mind you, the Dow futures too are flat following the overnight pullback that we saw. I think that's the order of the day as far as the morning cues go. The SGX Nifty will come up on your screen and it'll show you. It's a bit of a flattish to a marginally positive start, if you will, for the SGX Nifty. So we might actually not have a bad start for our markets. The question is, can it sustain? Now, frankly, in the trade setup, I think the big tech testimony. Remember, I was telling yesterday about how, or I tweeted yesterday about how Facebook, Google, Amazon, and Microsoft are all going to give a testimony before the Congress for their dominance on over the over their trade. And if indeed that is negative, then it might pull the Nasdaq down. There's also the US Fed decision. So I think the big tech testimony and the US Fed are the key determinants of the world markets today and thereby the Indian markets today. However, you have to admit that the Nifty reclaiming 11,300 after 4 months keeps the momentum in favor of the bulls. Yesterday's trade was positive. I think what really augured well was the leadership change yesterday. We've been used to seeing Reliance and banking uh, being the leaders of the pull and IT contributing. Yesterday we had autos participating, we had cement participating, and IT continues to do well, by the way. And therefore, I think that leadership change is actually positive. You need other things than Reliance to come out and participate. And by the way, if banks do participate today, and there are cues for that to happen today, then you might actually have a decent outing today. By the way, I mean, speaking of banks, I think what's really important to watch out for is the Prime Minister's meeting, right? Because the PM Modi will join stakeholders from banks and NBFCs today to discuss and deliberate on the vision and roadmap for the future. Uh, uh, in the evening, this has been said by the Prime Minister's office, and therefore this happening today is the big thing. When I sent what I wanted to say, I mentioned tomorrow, so it's my mistake, but the meeting is actually happening today, and therefore this will be the key thing from a banking and an NBFC perspective. So do watch out what statements come out of there. Frankly, it's a big earnings day as well. On the index, we have Bharti Airtel, very big set of numbers and what they say. Dr. Reddy's, Maruti Suzuki, all important. Because just remember, I want to draw your attention to the fact that Bharti Airtel, the last quarter when it came out with numbers, penultimate day, it closed at 536 and then it rallied all the way to 595. If an earnings beat comes out, you never know what could happen with Bharti. Now, aside of these index names, by the way, and for Maruti, there's also auto sales numbers in July, which will be the key to monitor. But aside of these index names, four numbers that I thought are very important to monitor, two which will come out with a really bad quarter, and two which will come out with a really good quarter, I presume. So watch out for Phoenix Mills and Interglobe Aviation. They will come out with poor numbers, and it's known, so no surprise there. If they deliver a surprise positively, it might be great. But I think Naveen Fluorine and GMM Fodder will have very good numbers, so do watch out for these. But the stocks to watch today, again, I don't have the stock of the day today. Nestle almost qualifies, but it's a very indifferent stock in that it could do something completely divergent to what the popular belief is. So I'm not calling it the stock of the day, but do watch out for this one. The numbers left a bit to be desired. The revenues for the quarter disappointed for Nestle, weighed down by the lockdown issues. The gross margin contracted 190 basis points due to higher commodity costs. But the Goldman Sachs note on Nestle puts it into perspective. They say that they are seeing headwinds to sales growth from increasing competition in the infant nutrition, as well as weak demand for categories like chocolate, which are discretionary in nature. They are also saying that the 13% EPS CAGR growth potential is comparable to peers, which are at 14%, and it's priced in with the stock trading at 64 times FY22 P versus peers trading at 42 times. Now, viewers, this is important because even brokerages which are bullish on Nestle, Motilal Oswal, for example, they are also saying that valuations at 64, 67 times, whatever you paste it in, are very, very rich. And therefore, I won't be surprised if Nestle comes off. But remember, yesterday, last quarter, Nestle came out with a bad performance, and the stock actually did reasonably okay for itself post results. So it's a very different stock. It could trade in a different fashion. But I would suspect that if things were to be normal, then Nestle should actually react negatively. Now I'm watching out for Yes Bank. I usually refrain from talking about Yes Bank because it's Yes Bank. I mean, it's reacted very, very negatively the last few days to the FPO shares being out, was on a lower circuit yesterday and then came off. But the numbers, glimmer of hope. And why do I say that? Because they saw deposit growth. That's quite interesting. The company is saying that there's a trend reversal in deposits, and which is actually a big statement for a brand like Yes Bank currently. There was 11% quarter-on-quarter growth in total deposits, 26% quarter-on-quarter growth in current account deposits, and term deposits saw 13% quarter-on-quarter growth. This is big for Yes Bank. Now, does this mean that the stock will change its course today? Remains to be seen. Let's wait and watch for an interesting one. RBL. The results were largely in line with estimates, but there were 2 or 3 interesting things that stood out for the bank, and which is why I bring it out today. One, the moratorium was down to 13.7% of the loan book from 33% in Q4, which is quite a big thing. It's happened for all banks, but it's a sharp one for RBL. They're seeing a sharper reduction in moratorium account in the wholesale book, and deposits were up 7% quarter-on-quarter. The baggage of Q4 seems to have been left behind. CASA touched 30% for the first time. So I think they've got a few things going for them, RBL Bank, and therefore it could be an interesting one in the session today. NIIT Tech, that's the other interesting one. And I call it interesting for a reason. I mean, lots of things are interesting today, but NIIT Tech also, because the Q1 results missed estimates, impairment of account receivables hit bad. So all in all, the numbers were bad. But look at this. They are saying that Q2, it's September quarter, they expect at least a 7% constant currency growth, at least 7%. They expect 150 basis points sequential improvement in EBITDA margins. And FY21 growth and margin outlook was also raised to mid-single digits, etc., flat EBITDA margins from what was given earlier. So the commentary, especially for Q2, is so strong that I doubt that the stock will react negatively. It will react positively. The question is, after it reacts positively, should you go out and buy it, or are there other better options available? I think brokerages say other better options available. So do watch out for NIIT Tech today. INDUSIND Bank is the other one that I'm watching out for because confidence capital comes in for the bank. The results notwithstanding, the fundraise of about 524 rupees per share at 3,300 crores is interesting. 2,500 crores from investors, which is Route 1 Capital. It was known, but ICICI approved, Tata Investments, and 792 crores for promoter entities. This is much needed promoter infusion, capital infusion, and this might actually augur well for illicit banks. So do watch out for this one. And lastly, viewers, Tata Coffee, super numbers. Do watch out for that. Hexaware, the delisting process is on, and could the numbers give a bit of a re-rating process on? So watch out for Tata Coffee, Hexaware, MCX, Morgan Stanley's raised the target. So all of these would be interesting. Last but not the least, as I said, as interesting as the stocks are today, look at this. What stood out for me. Goldman Sachs strategists came out with a note yesterday. They say that gold is the currency of last resort now, particularly in an environment like the current one, where governments are debasing their fiat currencies. They are going out and saying that there are real concerns around the longevity of the US dollar as the reserve currency. That's a big telling statement. Now, a lot of repercussions to this. No time to explain all of these. But mind you, I think I urge all of you to read more about this because this really stood out for me amongst all the other things that I've read overnight. Thanks so much for tuning into the Trade Salah.